I'm Jim Jubak, and welcome back to my YouTube channel for JubakPicks.com, JubakAM.com, and now for my Substack, Economics for Investors. I say welcome back because I've been on hiatus in video for a while I was working on getting that Substack up and running. And now that it's up and running, I'm going to resume these videos, shooting for 3 times a week. I'm posting them on all those sites and on Substack. The Economics for Investors Substack is really an effort on my part to try to get under the hood of what drives the economy and therefore the stock market. A lot of what we're doing right now is just responding to news flow, like, oh, what's the news on the Iran war and the Gulf of Strait of Hormuz, and is it going to close or open? And we just move up and down and on. I think longer term, what's important is understanding the economics of the system, what that means and how people follow economics, what the economic theories are, what's under the hood, what the statistics mean. And that's going to be what I'm looking at on Economics for Investors. If you're interested in that subject, you can just go subscribe. You can subscribe for free, which gets you typical internet stuff, part of the story, everything above the paywall. And you can subscribe, get everything, which is really 3 main posts a week. It's only $7 a month. So please check us out and try. So today's topic, and today is June 4th, is what the hell is going on with the oil market? Now, OPEC had a very important meeting of its technical advisors on Monday, June 1st. And the advisors basically all came out and said, hey, these are consultants, energy analysts, whatever. They came out and said, hey, if we were to open the Strait of Hormuz tomorrow, as in June 2nd, it would still take until the end of 2026 to get oil supplies back up to the pre-war state. What's interesting to me is that the market really didn't react to this. The market doesn't seem to really, the oil market and therefore the stock market doesn't really seem to care about how long it's going to take to get things back to normal, to repair the damage, to get stuff flowing through pipelines again. It's not simply turning on the spigot. And we've got damage to oil facilities and we've got shutdowns. And basically, I've been saying 6 months to get things back to normal, to repair the damage, maybe longer. The oil market and the stock market are behaving like, well, if we reopen the strait, that's all that counts. And that's because we're really following just spot prices of oil, which tend to react very, very quickly to news like that. If you take a longer term perspective, the real story, the economic story, is what's going to happen after the war is over and how long it takes to get things back to normal, and really what normal looks like. It's not at all clear that we're going back to where we were. I think the lesson, politicians, leaders always learn lessons from wars. They don't always learn the right lessons. For example, the French, after World War I and the horrific beating and deaths that the French and their allies took in the trenches of Northern Europe, built the Maginot Line because you want to have fixed fortifications to keep the Germans out. Well, the Germans for World War II simply rolled around the Maginot Line. The Maginot Line became a great useless piece of defense for the next war. But the lesson had been learned from World War I that you build these massive fixed defenses. So what's going to be the lesson from the Iran war? Well, I think if you look at what's going on with a scramble for resources and the unpredictability of supply chains, is that everybody is really, after the war, going to be concentrated on trying to make sure that their supply chain is insulated from these kinds of political events. So they're going to look at countries looking to develop domestic sources of supply for commodities, as well as for things like that are derived from commodities like fertilizers. You're going to, in fact, see, I think, a bidding war, if you will, to see who's going to open what next and where it's going to be. And it really won't matter how viable these things are economically. You're going to see a lot of effort to basically construct a kind of nationalist mercantile commodity system so that countries don't get whipsawed like most of Asia has gotten in this war. So I think that's the lesson that's going to happen. That's very divorced from what the market seems to be talking about, which is whether the Strait of Hormuz is going to open, whether oil prices are going to hit 110 or they're going to hit 90. Those are short-term stories. I think the longer-term story is what you might call commodity mercantilism. A lot of attempts to control assets, a lot of attempts to bring commodity production home, so that people who are regarded as not terribly reliable players, Russia certainly, probably the United States at this point, don't control what's going to happen in your economy because they have their hands on the spigots. And what the other thing is that I think the lesson is going to be is that more things are vulnerable than we thought. That I think that I certainly didn't think about fertilizer and the possibility that closing the Strait of Hormuz would lead to a 50% increase in fertilizer prices, because I didn't understand where fertilizer came from. We've got the same problem going on with helium right now. Helium is a crucial material in the construction of computer chips, and it's bogged down in the middle of this war. Titanium looks like another one that may be coming into the realm of commodity nationalism, mercantilism after the war. So I would look at all these things long term. OPEC has a big meeting scheduled for of its oil ministers on the 7th. I think they're going to try to figure out, scratch their head, not wearing a hat, but they'll scratch their heads, trying to figure out what to do about oil supplies going forward, quotas, and particularly the battles inside OPEC over who's going to be controlled, who really is a member and who's not a member. The Saudis are facing major challenges to their leadership, and I don't know how that's going to come out. But anyway, that's for the 7th. Beyond that, we may or may not see the Strait of Hormuz open again in any predictable timeline, which will mean lots of whipsaw on oil prices and stocks that go with them. But longer term, I think focus on commodity nationalism, commodity mercantilism, and look for assets that are going to become more valuable because of that. This has been Jim Jubak. Thanks for watching. If you want to subscribe to any of my channels, you can find buttons for that down below. Please check out my new Substack, Economics for Investors. Longer version of this, a more detailed version of this video is posted on all three of those sites. And please subscribe to this YouTube channel and watch me next time. And we're going to do 3 next week, and talk to you soon. Ciao.